This is the second chapter for today, chapter 8, which gonna cover we're gonna start going over the cost concepts and analyzing the costs. Those are the objectives today for this chapter: to define the three classes manufacturing cost, explain the variable fixed mix cost, apply the high-low method, and demonstrate how to calculate the cost of goods manufactured and prepare financial statements for the manufacturer. Let's start with the managerial cost concepts. Obviously, as a manager, we already know that we have to do those three activities: to plan, to direct, and control. The question are, what costs are involved in the making the product? The other question is the volume changes and how the cost changes? How the automation is going to impact our cost? How to best control the cost? Should the product or services be discontinued, or should we keep going? Those are the questions that we're trying to find the answers with managerial accounting by finding different type of costs, analyzing those costs, and see which one cost can help us and which cost can be eliminated. The cost objective is anything for which we want to accumulate cost. The example will be, in order to make a hamburger, we have to have a cost. What's the cost related to that hamburger? What's the cost providing the haircut? What's the cost preparing the tax return? Which are those costs? We're going to have a product cost, which for the product cost, we have to have a cost objective. The product cost objective is the one to produce the product. For that reason, since we have the product cost, those costs will be only and only related to our product, which will be for the manufacturing company. And we're going to have the period cost, which will be directly expense, and those are related to only one thing. Those are related to the fact that we're running our business. So those not going to be any costs which are related to our product, but will be associated with our product. That's why we're going to call it period cost. They support our production. So, cost concepts, manufacturing company. In order to produce a product, we need three costs. Remember those costs because we're going to talk about those costs over and over again. Direct material, direct labor, manufacturing overhead. And they usually comes in that order. First comes direct material, second comes direct labor, third comes manufacturing overhead. So in order to produce the product in the manufacturing company, we're going to have those three costs, which are direct material. Direct material is the raw material which is directly used and can be directly identified in our product. Example is going to include some of those in flour for the baking a bread, and the steel of making automobile cars. Direct labor. Direct labor will be again the same thing idea was a direct material, but in the terms of labor, that will be the completed physical work from our employee, which can be directly and easily trace, locate, and associate with our products. Why do we need that labor? Is to convert the raw material into a finished goods. Example will be legal staff in the company, the mechanics in the vehicle service department. Now, once we have direct material, once we have direct labor, we need one more cost in order to complete our product. That will be manufacturing overhead. For every product that we're going to produce, yes, we're going to have direct material which can be easily traced to the product. Yes, we're going to have direct labor can be easily traced to the product. But we're also going to have materials and labor that we cannot easily trace to the product, but is part of the product. For making bread, you need a pinch of salt. If you don't put that pinch of salt, your dought's not going to be have that elastic kind of ability. The flour, we can easily calculate it, but the pinch of salt, that will be hard to get the cost. So that will be considered indirect cost. For that indirect cost, then we're going to have that manufacturing overhead, which we're going to accumulate that cost and we're going to allocate it to our products. So how we should look at this is the direct cost is always direct material, direct labor. Indirect cost will be the raw material that cannot be easily traced, but is used from our product. What else is used in our product? We're going to have a rent. We have to have facility. We have to rent that facility. We have to maintain that facility, or even we can buy that facility. Or if you buy it, then we have to transfer the cost of the purchase price through the depreciation. If we rent it, that will be pure expenses. Then we're going to have the insurance taxes. We have to have a maintenance on the, or we have to pay the electricity. All this will be the indirect cost. Now, indirect material will be the small pieces of here and there, something small, which cannot be easily traced, but it's part of our product. Indirect labor will be any labor which is still related to our product, but it's not that direct, like a supervisor, like cleaning people who cleaning the space after we finish our work. Those are also related to our production, but cannot be easily traced or directly traced to the product. So since we have this classification of direct material, direct labor, and manufacturing overhead, we're going to start doing some classifications. First classification is which cost. First classification will be, we're gonna get the direct material and direct labor. We're gonna call those one prime cost. Why? Because they come first. Prime means first. So once we get the direct material plus direct labor, that's gonna give us the prime cost. Now, once we have the prime cost, then we're gonna find the next definition, which is conversion cost. Why do we need those conversion costs? We need the conversion cost to convert the raw material into the finished goods. So for that reason, raw material is our direct material. So we need something to convert that raw material into the product, which will be that will be direct labor and manufacturing overhead. For that reason, remember it, direct material plus direct labor, that's a prime cost. But direct labor plus manufacturing overhead is conversion cost. So as you can see, direct labor is in both formulas. And that creates a lot of opportunity for testing. When you have the total cost, you have the prime cost, you have the conversion cost, how much is direct labor. Right? There's a lot of opportunity here for testing, just give you an idea. So which of the following is not an element of manufacturing overhead? Let's think about it.
Sales
Manager's salary. Why is not? Because that's something else. Sales is usually direct period cost. That's directly expense. That's not even part of the product. Okay, so another question here for you. The following labor costs have happened in this company. Of this amount, of all these amounts here, how much will be considered product cost? So the product cost having in mind is direct material, direct labor, manufacturing overhead, correct? product cost. Everything else is period cost. Product cost is everything related to the product. Period cost is everything supporting that production or dealing with other activity which are not part of the product. What will be that activity? Sales administrative expenses. For that reason, that being said, which one will be considered product cost? Is direct labor product cost?
Yes.
Yes. Is indirect labor product cost?
Yes.
What kind of product cost? From direct material? Yes.
Overhead.
Perfect. How about the supervisor's salary which working in the plant? Is that product
Overhead.
cost? Overhead. Sales commission?
No.
No. What kind of cost is that? Period cost. Sales salary?
No.
No. Period cost. Okay. So which are the product cost? 1, 2, 3. Once you combine those three, you're gonna get it, right?
480,000.
So is it possible to 310?
No.
No. 310 is only direct labor. Is it possible to be 385?
No.
No. Why? Because 385 is direct and indirect labor. We need something more. Is it possible to be 820?
No.
820 our total cost, so it's not possible. So which one is the only possible answer?
C.
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 Do you have to calculate it?
Yes.
If you have anything else to do, go for it. But as you can see, by eliminating the other answers, I can easily come up with the right answer without even touching calculator. But it will be your decision how you're going to answer those questions. Because as you can see, 310 is given. I don't have to calculate this number. 820 is also given. I easily can eliminate 310 and 820. Now I'm 50-50. I'm going to ask myself 385. What's the 385? 310 and 75. Is that the product cost? No, it's not. And boom, I get the right answer without touching calculator. Right? This is one trick how to solve the multiple choice questions if you have one. So how are we going to go with the product versus period cost? Again, product cost is only and only direct material, direct labor, manufacturing overhead. Those are integral part of the product. Those are recorded in the inventory and is going to stay in the inventory. As you already know, the inventory is part of the balance sheet. For that reason, those will be called inventoriable cost or product cost. Period cost is the one that are directly expensed. And those expense when the finished goods are sold. So that's the period cost here. The period cost is the cost that matching the revenue earned a specific time. Those are non-manufacturing costs. Period costs are non-manufacturing. They're not part of the direct material, direct labor, manufacturing overhead. They're directly expensed. Which will be that? Selling, marketing expenses, general administrative expenses. So now, once we know that the period cost will be expensed, that raises the question, how about the product cost? Are we not going to expense those one? Yes, we will. But when? When we sell our inventory. Make sense? As long as we produce the inventory and we keep it as an inventory in our warehouse, that's part of our balance sheet, part of our inventory. In order to become part of the expenses, we have to sell it. And once we sell it, that will become cost of goods sold. Make sense?
Yeah.
The period cost, they're not going to have to go to the balance sheet. They directly go to the expenses. Not as a cost of goods sold. Those are going to go as operating expenses. So again, product cost, which is inventoriable cost, which goes to the balance sheet, is direct material, direct labor, manufacturing overhead. Manufacturing overhead including indirect material, indirect labor, and everything else. Period cost non-manufacturing cost, non-inventorable cost. They're directly expense. Go to the income statement. It can be sales expenses, administrative expenses, office expenses, CFO salary, period cost. Let's see this question now. We have the following cost. Of this amount, how much will be considered period cost? Now we're chasing the period cost. Direct material, what kind of cost is that?
Direct
Sorry?
cost.
Product cost. So that's gone. Direct manufacturing of labor,
Product cost.
gone. Manufacturing overhead,
Product cost.
product cost. Sales commission,
Period.
Cost.
administrative salaries.
Period cost.
So how much is the total? 4 plus 20.
20.
That's our answer.
Sir, but excuse me, sir, but administrative salaries, for the production, there's still some administration.
That is
Why?
true. That is true. But it's gonna say salaries for production. If it says only administrative salaries, it's not part of production. But as you can see here, what was that? You see here, supervisor salary plant,
Okay.
that's production. If it says here, salary supervisor manufacturing, product cost. When it says only administrative sales, period cost.
Okay. Thank you.
You're welcome. Yes, that's very good. That was very good question. It's all about terminology, all about the words. If you see manufacturing, production, product cost. If you see only administrative, sales, period. Not part of the product. So how the costs behave? Now, before we move to that point, I want you to understand something. Company has sales and has costs, right? For different purposes, those costs can be divided on different classification. So for the preparing financial statements, we're going to divide the cost of goods sold and the operating expenses. Now, for the manufacturing purposes, we're going to find any different ways to analyze these costs. One of the way was to divide it into product cost and period cost. But those are the same costs which used to be cost of goods sold and operating expenses. So if the total cost of the company is $100, I can make 1,000 different classification, but I cannot change the total of the costs. Total cost always going to be 100. For example, if I have 30 students in the classroom, I can make number of different classifications, but at the end of the day, all the total of all those classifications is going to be 30. Why? Because I have only 30 students in my classroom. I can divide it by gender. I can divide it by color of eyes. I can divide it by next classification will be color of the hair. Next classification will be length of the hair. Next classification will be the age. Next classification will be height. But at the end of the day, my total always going to be 30. Yes, I'm going to have different numbers in different classifications, but my number again, total will be 30. Same thing we're doing here with finding different ways to look at the costs. First, we look at them as the product and period cost, but the total cost is 100. Now we're going to move to how the costs behave. And we're going to define two types of behavior. But again, the total cost will be 100. So let's see it here, cost behavior, how the costs behave. Why do we need that? Because we need to understand how to use that cost. The cost behavior analysis in identifying, measuring the key business activities. So we're going to try to find those, which are those business activity that drives the cost. And based on that driver, how the costs behave. So activities, it can be expressed in terms of the sales doors, or kilometers driven, or room occupancy of the hotel, or dance classes. So what we're trying to find out is the for activity level to be useful, we have to change the level or the volume of activity which correlated with the changes of the costs. I know it sounds very abstract, but let's go further and I'm gonna make it more simple. Activity level is called simply activity index. Now, identify what activity drives the cost and how the costs behave based on that activity. For that reason, we can have three types of costs: variable cost, fixed cost, and mixed cost. Now, before I continue, one more thing that I want to mention here. Cost, by definition, cost is mathematical function of two variables. Any of those costs will be simple mathematical function of two variables. What will be those variables? Will be the number of the units that we purchase time cost per unit. And that's going to give you the cost. So again, it's a mathematical function of two variables. One of them is number of units, the other one is the cost per unit. And that's going to give you the cost. It's the same thing with the fixed cost, it's the same thing with the mixed cost. Now the question is, what drives the cost? First, let's go with the variable cost. Cost variable is very interesting because the variable cost, again, in total, increasing directly and proportionate with the level of activity. Which is the level of activity? Number of units, number of the kilometers, number of rooms, occupancy, anything like that. What that means? Simply, you already know this from experience. If you go to the grocery store and if you want to buy potato, let's say you need potato, you're going there and you're seeing the price today is $2 per pound. What that means to you? Means that if you don't buy potato, you don't have to pay. If you buy 1 pound, you have to pay $2. If you buy 10 pounds, you have to pay $20. So what drives the cost here? Level of activity. Which is the level of activity? The pounds that you're purchasing. So the total cost will be directly and proportionately affected by the level of activity. So the variable cost remains the same per unit. So the price per pound always going to stay $2. Then what's going to drive the cost? The number of the pounds that you buy. The example here is this company manufactures tables which have the camera which costs $10. Now what drives the cost is the number of the tables produced. Because for each table, we have to install that camera, which camera costs us $10. So if I produce 2,000 tables, how much will be my cost for the cameras? Obviously, 20,000. If I produce 10,000 tables, the cost for the camera is going to be 100,000. Why? Because I have to install 10,000 cameras on the 10,000 tables. If I produce only one table, how much will be the cost for the cameras? $10. If I'm not producing tables, I don't have to pay. So that's the beauty of the variable cost. So it's starting from zero and exponentially goes up based on the level of activity. More you buy, more you pay. Less you buy, less you pay. Not buying, not paying. But cost per unit always stays the same. Regardless of the number of tables that you're producing, regardless of the number of cameras that you're installing, the cost per camera is always and always $10. That's why the variable cost per unit is the steady line. Variable cost in total goes up. How high can go? Depends on the number of units that you're gonna produce or gonna purchase. That's the variable cost. Let's see fixed cost. Fixed cost, again, is number of units, cost per unit, but behave different way. Why? Because it's irrelevant regardless the range. Good example for the fixed cost is the cost of your SkyTrain. If you buy a monthly pass for the SkyTrain, regardless how many times using the SkyTrain, you're paying the same amount. Compare if you're buying the single ticket. With the single tickets and the monthly pass, single ticket will be your variable cost, monthly pass will be your fixed cost. Why? Because you bought one pass for 1 month and you pay fixed amount of $130 or $140 for 2 zones. Now, if you don't buy monthly pass and go with the single ticket for every trip, then based on the number of the tickets that you purchase, that's how much you have to pay. So if you purchase 1 ticket, the cost will be $310. If you purchase 10 tickets, $31. More you ride the bike, more you ride the SkyTrain, more you have to pay. Where in the monthly pass, once you pay $140, that's it. But now, what's going to happen if you ride the SkyTrain only once? How much will be the cost for that trip? $140. If you go to the SkyTrain twice, you reduce the cost per unit. You're down to $70. If you ride the SkyTrain 10 times, the cost per ride goes down, $14. The total cost is gonna stay $140, but cost per unit is gonna exponentially start growing down as much as you using that particular activity. So let's see this. This company leases a productive facility for $10,000 per month. $10,000 is the total fixed cost. Now, that rent, cost per rent, will obviously, more table we produce, less cost per table is gonna go. So if we produce only 1 table in the facility that costs us $10,000 per month rent, how much will be the cost for that table, which is related to the rent, $10,000. If we're producing 2,000 tables, then the cost for the rent is going to be split through 2,000 tables. So it's going to cost us $5 per table. If I produce 10,000 tables, then the rent cost, which is related to the production of that tables, is going to be only $1. The other example with the fixed cost, in order to get even more comfortable, is the rent. If you're paying $1,000 and 1 person living in that apartment, cost per person is $1,000. But if two people live in the same apartment, who would you paying $1,000, then cost per person is $500. If 4 people live in that same apartment, then the cost per person goes down to $250. What's your incentive? To put as many people as you can in that small apartment. That's how you're going to reduce the cost per person. So for that reason, the total fixed cost always stays the same. Numbers of the usage of activity is the one that reducing the cost per usage for that activity. Distinction between the variable and fixed cost is variable cost that vary in total directly proportional with the change of activity, where the fixed cost remains the same within the relevant range of that activity. If the volume increases, total cost stays the same. Cost per unit is gonna go down, but total cost stays the same. And here, if regardless if you purchase or not purchase, the variable cost per unit is always gonna stay the same. What's the relevant range? Relevant range is the level of activity for which those two costs don't change their behavior. Variable stays as a variable, fixed stays as a fixed. We're going to find different ways. So the true variable cost looks like this. So in order to understand the cost and predict the cost, we're going to choose the area which the cost is linear, or we can express it with the mathematical function. The other type of the variable cost, it might be step variable cost. Up to that many units, you have to pay that much. Once you go to that, if you increase the level for that, you have to go to the next level. So again, what we're trying to find is the range where the costs behave the same way. Variable cost behave as a variable cost means the variable cost per unit doesn't change. And in total, increases exponentially. And the driver of increase is only and only the number of units or number of activity that we use. Mixed cost. Now we're going to the mixed cost. What's a mixed cost? Mixed cost, good example for mixed cost is the cell phone with 1 GB data. On the cell phone, you have to pay $50 per month, regardless if you use it or not. But you have one GB data. Now, once you exceed 1 GB data, you don't have to stop using it. But the telephone company is going to start charging you for every usage above 1 GB. So that's the portion of the variable cost. So you see, in the cell phone, you're going to have portion of the fixed cost and portion of the variable cost. So what will be the mixed cost? Mixed cost will be the total cost, which is combination of the fixed cost and the variable cost. Product cost can be either fixed, variable, or mixed. Which one be example for the fixed product cost? That will be the rent. That will be the factory equipment, depreciation. That will be the plant supervisor salary. Which one will be the variable cost? Direct labor, direct material. Why? Because more we producing, more we have to pay. Mixed cost will be factory utility cost. Why the factory utility cost? Because in the factory utility cost, you're always going to have fixed amount that you have to pay and the variable amount that you have to pay based on the usage of activity. Period cost, they also can be fixed and variable and mixed. Fixed with the president's salary, CFO president of CFO salary. Variable cost will be the sales commission. Salespeople, more than selling, more you have to pay. Less than selling, then less they have to pay. Office utility cost is the example of the mixed cost. How we gonna analyze the costs? So far we're talking about costs and how the costs behave. The purpose, as you remember, for the managerial accounting is to understand the cost, to analyze the cost, and try to predict the cost. One way to predict the cost is using this high and low method. And high and low method, we're going to have a mixed cost, which we're going to classify into the fixed and variable component. And one approach to separate cost is the high and low method. What we're going to use, we're going to use the different costs within different periods, and we're going to find the difference in the cost between the high and low level, which represents the variable cost. And since the only variable cost changes as activity level changes. So from the theoretical point of view, first we're going to determine the variable cost per unit using the formula changes in the total cost divided by the changes in the level of activity. Then we're going to determine the fixed cost by finding the total cost, eliminating that activity. After we do this, we're going to come up with the formula, which formula is going to help us to do this. So in order to explain this, I'm going to grab this formula, I'm going to grab this information, copy it, and move to the Excel spreadsheet. As you already know, probably know, I like the spreadsheet, Excel spreadsheet, because it helps you to explain things better. It's more visual and more easy for you to understand those ones. So I'm going to flip this information on the Excel spreadsheet, and give me a second, I'm going to share my screen, and we're going to start working on this in order to explain the high and low methods. So this is our information. We have here, let's go with January. Then we have February. And then we don't have to write everything. I'm just going to drag it down, and it's going to give me all the way to April. What else I have? Level of activity. Activity, which is the kilometers driven. And I have total cost. Those are the two things that I have. Actually, there are three. Let's make it a little bit bigger. All those. And like this. Actually, I can get the whole entire sheets to be on that level. So what I have to do, I have to put the numbers. The kilometers driven in April was 40,000. Then we have 80,000. Then we have 70,000. And then I have 100,000. The cost is 30,000, 48,000, 49,000, and 63,000. Those are my costs. Costs are going to define it as a cost. And those numbers will be just numbers. For the kilometers, I don't need the zero, so I can get rid of the zero. This is my information. Very simple, very easy to process. Now, in order to start this calculation, what do I need to know? I need to know the following, that my total cost is equal to variable cost plus the fixed cost, correct? If the cost can behave only as a variable and fixed, my total cost will be always going to be total variable cost, total fixed cost, going to give me the total cost. Are you with me?
Yes.
Okay, so fixed cost is fixed cost. Fixed cost in total, so total fixed cost doesn't change, it's constant. Not that should be that constant. But total variable cost is equal to number of the units that we're purchasing or using, time the cost per unit. Or that will be variable cost per unit, correct? That's how we calculated this. So in that case, my total cost, in this case, will be the variable cost, fixed cost, plus, in brackets, I'm gonna have the number of units times the variable cost per unit. Now, how can I use this high and low method in order to find out how much is my variable cost per unit, how much is my fixed cost, and how much is the total cost? The good thing is the total cost is already given to us. So I have the total cost. I have the number of your activity. I have the number of units or kilometer driven here, but I don't have the variable cost per unit. And I don't have the fixed cost. How can I find those ones? Very easy. What I'm gonna do first is I'm gonna find the high point of the usage. I'm gonna find the high point of usage. And I'm gonna find the low point of usage. Where is my high point of usage? Either you can observe it by seeing the numbers, either you can plug the formula. Either way works. If you want to plug the formula, go to the formula, go to the more functions, go statistical, choose the maximum, which will be the highest point, select all those cells, and the maximum usage is $100,000, 100,000 kilometers, sorry. Low usage, again, you can observe it and you can see that in January we have the low usage. Or you can, again, plug the formula, which will be go to statistical, go to the minimum in this case, highlight all the cells that you want to check, and that's your low usage. Now, I have to get the cost associated with that level of usage. So my total cost at that level of usage is $63,000, right? So in this case, in order not to make a mistake, you can plug the formula again. Go to lookup reference and go to the vertical lookup formula. And we're gonna look for this value. And I'm gonna look for that value in this table tray. And every time when I see $100,000, I'm gonna put the information from column 2. And if that doesn't work, I'm gonna have false. I have to change this here, like false. And then it's gonna give me the number that I'm looking for. And I have my cost for that particular high usage. If I want to do the same for the low usage, I can do the same. Or I can simply see 4,000, 30,000. That will be the other way to do it. But let's see, use the formula again. So I can get used to the formulas, go to the vertical lookup again, check for this value where I'm gonna check, I'm gonna trace it in this set of tables. I'm gonna use second column of the table, which is the total cost. And if it's not, I'm gonna put false. Make sure you spell in the false correctly, otherwise it's gonna give you something else. So I have the information that I needed. What I'm gonna find out now is what's the difference. Once I have high and once I have low, Let's highlight the high in some kind of colors. Let's bring some colors here. Let's go with that color for the high, not too bright. And this will be color for the low. The low, the color, let's go with choose this one. Then I'm going to find the difference. What's the difference? Difference as kilometers first, 100 minus 40, and difference in the dollars amount. Let's go with this one, 63 minus 30,000, and that should be, give me as a dollar amount, I want it as a dollar amount, 33,000. Now the question is, once I have the difference in cost and difference in the kilometers, and I know the only thing that drives the cost here is the number of units, how much for those two levels is for this level is my variable cost. So what I can calculate here, my variable cost per kilometer, it will be equal to dollar amount divided by number of kilometers driven. And I'm going to find out that my variable cost in this case is 55 cents. So for every kilometer that I drive, my variable cost is 55 cents. Having that in mind, let's try to find out now how much is my fixed cost. I get my variable cost. Let's find out how much is the fixed cost. Is equal to how much? In order to find out, we have to use either high, either low method. Let's go with the high method first. In the high method, we already know that for the high method, we have the following structure here. Let's not like that. Let's put it this way. I have this. So what that means, and I know the formula for the total cost is equal to that formula. So what do I know, what I don't know? I know my total cost. My total cost is 63,000. What else I know? I don't know my fixed cost. Fixed cost is unknown, but plus in the brackets, what I know. I know that when my total cost is $63,000, I'm using 100,000 kilometers. And I know that it costs me $55 per kilometers. 55 cents, sorry, 55 cents per kilometer. Once I know this, can I express my fixed cost? Yes, I should be able to do that. How much will be my fixed cost? My fixed cost will be equal to total cost minus how much is 100,000 times 55 cents?
55,000.
55,000. So my fixed cost should be equal to how much?
8,000.
$8,000. And that's dollars amount. That's if we use the high usage. Let's try with the low usage and see what we're gonna get if we're using the low usage. Let's format this so it be the same color. If we're using the low usage, nothing's gonna change. The formula is gonna still the same. We're still applying the same formula, but now the total cost is only $30,000. And that should be equal to my fixed cost, which I don't know, plus number of units I know. In order to get $30,000 total cost, I'm using for 40,000 kilometers, which costs me 55 cents per kilometer. Make sense?
Yes.
So, can I express my Fixed cost. Yes, I can. Fixed cost will be equal to 30,000 minus
22,
22.
how much?
22,000.
22,000. So my fixed cost will be equal to what?
8,000.
8,000 again. So what that shows me? That shows me, regardless which method I'm going to use, high and low, my fixed cost always going to be the same. So you don't have to use the both points. You can use only one. Because regardless which point you're using, you're going to get the same result. So now the question, the logical question that you're going to ask me is, why do we have to do all these crazy calculations? What's the value for us? The only value that we can get is to predict the total cost. Again, managerial accounting, we're trying to predict the future. One way to predict the future is to predict the total cost. So how can we predict the total cost? By plugging the formula based on what we know. So what will be our formula? Total cost, it will be equal to what? I already know the fixed cost.
8,000.
8,000 plus, in brackets, number of the units, or number, in this case, number of kilometers, time 55 cents per kilometer. So when the manager comes, or when the supervisor comes, or the CFO comes and say, hey, can you tell me what will be my total cost next month? You have to ask him only one question. Tell me how many kilometers you're going to use the vehicle, and I can tell you how much the cost will be. Make sense?
Yeah.
That's the only reason that we're doing all this exercise. That's how we can predict the future, because now we have a formula which we can use the future. The only downside of this method is you can use this formula is applicable only and only at these 2 points, high and low. If you try to apply this formula in any other month, it's not going to work. That's the limitation of this method. So let's go back to slides. And now, once we know that, we already know that our variable cost per unit is 55 kilometers. By finding the difference in the cost between the high and low, and finding the difference of the kilometers between the high and low. And once we have that, we can use either method, either the high point, either the low point. We're always going to come up with the result that total fixed cost is $8,000. Once we have that one again, we can easily predict our total cost, which will be our maintenance cost. Maintenance cost will be next month, $8,000 fixed cost, plus number of kilometers times 55 cents per kilometer. So if we use the next month, if the manager says, I'm going to use the car for 45 kilometers, I can easily tell you how much is the total cost. Variable cost. What's the variable cost?
D.
A.
B and A. So do we have in one answer B and A?
Letter D, B and A.
B and A. Okay. So with this high and low method, following cost activity has been provided to you. Based on this information, what will the total cost be if the level of activity is $4,250? So what we have to do is very simple, get this thing, copy it, move it to that Excel spreadsheet that we already have, which I'm gonna post you, I'm gonna make it available for you as well. Once you move to this one, we can move to the another screen here. And what we have to do, we have to plug somewhere that information. Let me plug it somewhere to see how useful it is. and then I can copy it from here and paste it right here as a numbers. So I need one more here, unfortunately, because that's not enough. Gonna get one more and one more here. So now what we have to do, we have to get number of activity, how those activity was expressed. Not my month, only with, let's pretend it's month. It doesn't matter to us. And let's get those two numbers, make it like this. So what we have to find out, which is the highest, which is the low. On the high, we are not missing that one. So I have to extend this table to include that number as well. And also in this formula, I have to extend the table to include that one as well. And I should be able to get it. So in that case, we can see the highest point is May, 290,000. The lowest point is January, 169. 2,000 is the difference in the usage activity. 50,000 is the difference in the dollar amount. Cost per kilometer, so cost per activity is $25. Once we get that $25, what we have to do, I just have to plug those numbers. The total usage here is 5,000 and the total usage here is 219. And the lower point is 3,000 versus 169,500. And change the formulas here. We can use only one method just to make it faster. 219,500 will be equal to 5,000. We have to change that one. It's 5,000 only times 25. $25 per single level of activity. And how much will be that? I can easily, actually, what I can do is I can get those numbers. We're gonna get, here will be 295,000 and that number will be equal to 5,000 times $25. That will be 125. So my total fixed cost will be equal to, just to make it faster, this one minus that one, and be 94,500. So the management asks us what's going to happen if we use this machine for 4,250, 4,250. If we use it 4,250. So what we're going to do, the total cost in this case, let's plug it in the formula, will be here 94,500 plus 4,250 times 25. So how much will be our total cost? Will be equal to 94,500 plus, and this cells I'm gonna have, it's equal to 4,200 times 25. So my total cost will be equal to
200,750.
equal to this one plus that one, and 200, 750. Do we have that as an answer is the question. Let's stop sharing this and let's go back to the slides and see if we have this as an answer. Yes, that will be answer A for us. Make sense?
Yes.
And this is the, on the bottom, you can see how we calculate, but we already show you on the Excel spreadsheet how we calculate that one. And that will be posted for you. And that's where I'm gonna stop on slide 53. And the remaining slides, we're gonna talk about a little bit in the classroom. Now, what I want to tell you is about the quiz. In the quiz, you're gonna have Only one multiple choice question. And that multiple choice question will be from the chapter of the financial statement analysis. Then you're going to have a question on which you have to calculate me either how much is the net income, either how much is the retained earnings, something like that, from the very first chapter that we have. So that will be cover chapter 1. Then you're going to have question for like a scenario question, and you have to calculate me ratios. Which ratios you have to calculate me? Either you have to calculate me accounts receivables, either question will be, no, the equation won't be provided. So I want you to focus on either on accounts receivable, either on the inventory ratios, those activity ratios. Okay, those will be the 2 ratios that will be tested. So focus on those ratios and see what you can get there. And the last question will be on the depreciation. You're going to have scenario with the assets. So you have to identify first what's the cost of the asset. So there will be different costs given to you. You have to identify which one is the cost of the asset, which one is expense. Expense you not include in the cost of the asset, only the cost of the asset. Then you have to come up with the depreciable amount, how much you have to depreciate over the life of the asset. And I'm going to ask you a question, how much is the depreciation using certain method? And the last question will be something in terms of decision, which one will be better for the company in terms of depreciation method, which is going to give you either high income or lower income. And those will be the questions. Very straightforward, nothing scary, nothing to worry about. However, you still have to study.
So we will not be doing balance sheet in this quiz.
No.
Good.
No.
Okay.
No balance sheet. Only ratios, depreciation, and simple calculation. That's all.
Okay.
Professor, can we
Yes.
use our cell phones as calculators?
Well, since you don't have any other calculators, yes, you can. One more thing. In order to get your marks, on the quiz, you have to show me your calculation. If you give me a single number only, I'm not going to give you the marks. So every time when there's a calculation, I want to see your logic. How did you come up with this number?
So are you saying we are not allowed to use calculator at all?
No.
Okay.
You're allowed to use the calculators. Don't get me wrong.
Okay.
But I want you to show me how you come up with the number.
Like every step of the calculation we are doing.
Sorry?
Putting in the paper every step
Yes.
that we are calculating.
Yes. I want you to show me the calculation that you're doing. Right? Final number is not going to give you the marks. If you just show me one number, it doesn't work for me. Because I don't know how did you get that number. I want you to show me your logic. And the other thing is, once you show me your logic, I may find some marks to give you here and there. If you give me a final number, then there's nothing for me to play with. Either you're right, either you're wrong. But if you're right, I don't know, is that your answer or somebody else's answer? Make sense?
Okay.
Okay. Thank you, guys. Thank you for today. I'm going to post you these recordings. Let me stop
Thank
this
you so
recording.
much, Professor. Thank you.